Welcome to the virtual webinar, Reimagining AP with AI for Greater Control over Cash Flow. This session is going to help us learn how companies can leverage AI to automate the AP function from start to finish, doing away with human reviews and approvals while generating significant cost savings. Before I kick off, I have a short piece of housekeeping that I want to share with you all, and then we're going to go ahead with the presentation. So, firstly, I want everyone to get acquainted with the dashboard in front of them. They can refer this session to a colleague by clicking the paper plane at the bottom of the screen if they're enjoying the session. You can learn more about our speaker today by clicking the little profile at the bottom of the screen for speaker bio and LinkedIn. You can ask questions or make conversation with our speakers today and fellow attendees through the live attendee chat on the left-hand side of the screen. And you can keep learning with our supporting content. So, as you can see, we have a couple of free resources available to you. You can request your free mini assessment today. That's at the top of the resource center. You can learn more about OpenEnvoy's AI-powered AP automation solution. You can calculate your annual savings with AI-powered AP automation. You can learn more with a case study on how Schooler leveraged real-time tech to identify $2 million in duplicate invoices. And you can also download the slides from today's session in order to learn more. So with that in mind, I'm going to hand things over to one of our speakers today. My name is Jordan Mullins. I'm the head of editorial, and I am going to be having a conversation with Matthew Tillman. He's the co-founder and CEO of OpenEnvoy. So without further ado, Matt, please tell us a little bit about yourself. Welcome to the virtual stage.
Thank you so much. Thanks for having me, and thanks to everyone for attending this morning. My name is Matthew Tillman. I'm the co-founder of OpenEnvoy, which focuses on bringing AI to the financial suite. And we're going to talk a little bit today about AP automation. And I get it, AP automation, not the most exciting thing to start off your day with usually, unless you're like me and you've had experience in the space. So we're going to talk a little bit about the problems of AP automation, some of the challenges that are faced by shared service organizations when implementing AP automation. And we're going to do that from a different perspective than most that I've seen in this space, which is I was the CEO and founder of a number of other companies. And in every one of those companies, the AP team came to me, or the finance team came to me and asked me for budget for AP automation tools. So we did a review of literally hundreds of tools in the space from a technical perspective, not a procurement perspective. And the results were really interesting. And we're going to share some of those with you today, as well as a little bit of how we've attacked the problem and the results that our customers are experiencing. So to get things started, the reason why I'm so excited about AP automation is because I've had to pay hundreds of thousands of dollars personally to AP automation software that I was unhappy with. And the reason is that there was $16 trillion in spend in the US in 21, and you've got to love outdated results like that, which are in fact the latest results. And 12 trillion of which went entirely unreconciled. And a lot of you are probably thinking, well, wait, what are these companies doing? Well, these companies are actually your companies in reality. 12 trillion went unreconciled for a variety of reasons, which we're going to talk about today. But overall, spend is fairly out of control. And that means no two-way matching, human approvals, low visibility, lots of workflow, et cetera, et cetera. So we're going to get into that today as well. So what are the three things that finance teams are facing right now? Is every CFO in the country, every CFO in the S&P 500 has had a CEO or a board ask how the pandemic has affected their labor force. Right? Number one is job descriptions are going unfilled. It turns out kids don't want to get out of college and make 43 grand a year looking at invoices all day long. That's a really shocking statistic. Number two is they're all asking, what's our AI strategy? And the fact that AI went from a little sort of hacky thing with low confidence score 5 to 10 years ago in the finance space, it's now become enterprise grade. We're going to talk a little bit about what that means. More popularly, everybody's heard about LLMs and things of that nature, but those are actually still very new relative to somewhat more mature vision models. And then finally, cash flow. We used to be valued on EBITDA. That was a really popular way to value a company for many, many years because it was before interest. Well, it turns out when interest goes up by 600%, people start to value companies on cash flow with an average cost of capital of like 8.5 points. So we're going to talk a little bit about how these waves are affecting the finance teams and very seriously affecting finance teams. But before we do that, I think we're going to start with a little poll. So you want me to read it? I can read the poll question, Jordan.
Sounds good.
Okay. What are your greatest challenges? I always like to hear this. What are the greatest challenges with your accounts payable function? Now, it's interesting, too, from a shared services perspective, they are your customers. So what are your customers saying to you as the biggest challenges? So is it manual invoice processing, data entry, which is shockingly still a problem in 2023 for many companies, approvals and workflows, which we're going to talk about a little bit throughout this conversation, effective vendor management, so the relationships that your team is having with vendors, and then, of course, duplicate invoices, overpayments are sort of why I started this company, because of how painful it is to learn that you've overspent $500,000 with a vendor and you had to beg 6 months to get your money back, and usually only part of it. So we're going to start there. So that's the poll question. So go ahead and enter the poll. I believe it pops up on your chat right there.
Yes, it does. Thank you so much for sharing that. And then while we're kind of listening and waiting for our attendees to vote, could you tell me a little bit about the current challenges in AP automation?
Yeah, I think the number one challenge, it's sort of said differently in different places, but the number one challenge is visibility. If you look at every AP automation tool out there, you look at every ERP instance, they all preach visibility, 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 and then second, they sort of preach control. And the reason is because you actually don't know where your problems are. This was indicated really well by a customer of ours recently on stage at another conference, that before implementing a solution like ours, they had no idea the severity of their challenges, because it's very difficult in a modern operating environment with traditional ERPs and all AP automation tools to find out how much you're actually missing without doing sort of hacky things like spot checking and things of that nature. So I think that seems to be the biggest set of challenges. The next set of challenges, as I mentioned before, you've got to hire a lot of people in order to reconcile every invoice that's coming in the door. So you simply don't do it. You use thresholds and you sort of hope that the thresholds work. And that's sort of the definition of automation in the space. So those are a couple of the really big challenges.
Thank you for sharing that. And so what we're going to do now is push on a little bit, because I know that you have a couple of great slides looking at some of the contributing factors of what can make AP automation difficult and what can make AP challenging. I'd love to hear more about that.
That's great. So in general, 27% of invoices are audited, right? This is sort of the number. And that means at least receiving a two-way match. So maybe more than that, but that means at least receiving a two-way match. That's not a human telling you what, GL code the line item should be charged to, as an example. 30% of all invoices have at least an error, and 90% are in favor of the supplier. So the problem exists sort of in every company, in every business. And it's something really difficult. It's a challenge really difficult to get over for a lot of companies to admit that they're seeing this sort of severity in their vendor network. And it's also sort of personally difficult because no one likes to hear that their vendors are overbilling them. And the truth is most vendors just don't want to overbill them in the first place. They have a lot of subcontractors that lead to this overbilling. Duplicative billing is usually based on recognition timing. And so it's one of these things that the industry doesn't want, but the truth is, only 12 trillion receiving at least not even 4 trillion receiving at least a two-way audit is honestly a pretty pathetic number at this stage in technology. One of the biggest reasons for that is that for the past many decades, companies have been sold workflow tools, right? And workflow tools are really interesting because the goal was to distribute work to the rest of the the rest of the team, the rest of the organization. But legacy products, as you might experience yourself if you have some of them around, big old clunky dashboards, big old clunky forms, and in truth, a lot of forms, which means a lot of manual work to get visibility, which means it tends to lack visibility. And because there's so much manual work, it tends to have really low coverage. And also, the truth is humans just aren't that good at transcribing information. We're just not. I think a recent study showed that we're about 68% good at transcribing documentation. So the truth is you have a really low accuracy. And if you have this as your input, by the time it gets into your ERP, by the time it's ready for payment, by the time your vendors have experienced this process, it's all sort of out of balance. And so companies have a variety of sort of hack solutions to solving these problems. We used to hear all the time, oh, I think we have a workaround in place, right? It's a very common thing to say at an organization. And it turns out that the majority of the industry is supporting those workarounds. So you just really lack visibility. You lack the coverage, certainly, and a very low degree of accuracy. Let's talk a little. Go ahead.
I was just going to say, it really sounds like current solutions potentially aren't providing as well the right guidance or the right tool set in order to be, I think when we see kind of people making makeshift solutions, that's a red flag that something is, there's a gap in current provisions.
Yeah, I believe that a previous SSON study suggested that the AP automation tool that was in place at an organization is up for review every 14 months. And so the churn in the ecosystem is really, really extreme, especially when you consider that it takes 12 months to implement some of these solutions. So we're going to talk about what these solutions are and sort of why they're biased to creating that challenge for companies. And I think the thing that everybody who's experiencing this, everybody's on this call, everybody that's working in the space right now will notice is that BPOs, the BPOs that they've trusted and worked with for many, many years, decades even, are coming to them, selling them a whole new set of tools right now at this moment. And the reason is because they are obsolete. If you're using more than, let's say, a person or two for every 5 billion in payments, you are not automated. And that includes outsourced people. So for all of those BPOs that are currently lining your inbox, diluting your inbox with inbound requests to set up meetings and sales calls and things like that, it's because they have no real product to sell you now that AI exists and that AI is in fact enterprise grade. You can trust it. And BPOs historically have given you really low accuracy. What they've started to do is skin themselves as software. So you'll read a lot of BPO websites that now say AI, and then behind the scenes, it really just means offshore or nearshore labor, right? So you see the accuracy is really low, and then they'll say things like we combine people with accuracy, people with tech and things like that, which is all sort of just marketing terms around the fact that they do in fact have really low accuracy and really slow turnaround times for the most part, because they have become obsolete in recent years. Next, payment networks. Inherently biased model, you charge them, you pay them on a percent. How can you know if you're spending the right amount with their solution if you have to re-audit every invoice in order to find out if you spent the correct amount in the first place? It's sort of impractical. That's what you're paying them to do. Many of them don't even offer the service. Many of them, in fact, offer workflow automation upstream, either through partnership or in-house development, and that's to capture more of your payments, of course, because you're not going to use a single exclusive payment rail. It would be bad portfolio management. So they have a inherently biased revenue model, but they don't really want to be good at it. They just want more of your payments. And then finally, workflow automation. This is the thing that bothers me most as a technologist, because the majority of solutions in the market that we were looking at, and we found many of them, the leading solutions in the market today, basically take the work from the finance team, because you can't hire enough AP people to process every single invoice in reality, and they distribute that work to the rest of the company. What this does is it decreases the cost of the finance organization, and it increases the cost of the business, because now you're paying for a solution to distribute work to higher cost headcount. And so that's the reality of AP automation. So we looked at it and we had a very different take on what needed to be done because of how the market had shifted and because of processing power and things of this nature that allow us to apply AI techniques specifically to this space.
And so what we're hearing now is a bit of that catchphrase AI. We're hearing so often about how it is coming in and it's revolutionizing or changing the way that our functions, particularly our finance functions, can process forms, can improve cycle times, can remain up to date with auditing. But I'm curious to hear from you a little bit about, how is it interacting with AP to an effective extent?
Well, that's right. So I think we're going to talk a little about that. That's a great transition into sort of the next slide as well, right? And so here's what I'll say. My background is in machine learning for the past 23 years now. I've been developing machine learning products in a variety of industries. My patents are in this space. The thing that's happened now is that AI had its iPhone moment. And everybody heard about chat programs like ChatGPT and things of that nature, Stability AI on the visual side, where you're sort of creating content with low level input effectively. And it's using a variety of data sets to do that. That's not really the most important thing for accounts payable to be able to generate content as an example. However, the techniques are very similar. So what has happened is that over the past couple of decades, the cost of implementing AI has dropped dramatically. And so the cost of the organization, the cost of the provider, the cost of the vendor, obviously, that cost has dropped dramatically, which now aligns with the business cost requirements. It's having its sort of moment because you can access it so easily. And it is very, very effective. 5 years ago, to be able to tell you that we can instantaneously process documentation with an accuracy far superior to anything else in the market is sort of something you would see on a website with a bunch of people behind the scenes, right? And now we're starting to see that in actual technology. I think the thing that one of the tools that shared services and procurement people and finance people can sort of use in these situations is when they're thinking about purchasing an AI solution, they're thinking about working with AI, they have to put the vendor through their paces, but in a different way than they've historically put the vendor through their paces. Right? So historically, you sort of know you're getting a workflow tool and you're thinking about how easy is it to configure and things of that nature. Well, the configuration is no longer required. So a lot of the RPA tools and the RPA thinking that your company has sort of built over time is no longer valid. It's now completely obsolete. Now what happens is you give the system the documentation and the system generates an outcome. And the outcome is superior to the human outcome you would have had historically. And so I think that has just changed so dramatically. It's very difficult for vendors to say, well, wait a second, I'm seeing every legacy vendor is coming in and saying they've got an AI solution sort of bolted on. It's like, what is the outcome you're trying to achieve? And then immediately make them show you that. Because if they have actual AI, on a sales call, on an intro call, you should be able to immediately and instantly upload your invoice. If they can't on the phone take an invoice and processes it with almost 100% accuracy in real time, they have no AI solution. They have a bullet point on a slide. So I think that's really important. But that's actually changed considerably from where it was just a few years ago.
So we've got one more poll that we want to run with our attendees. And I think that this leads quite nicely into what you're saying. I love that comment about not having AI. You have a bullet point on a slide. So I'd love to hear from our attendees. Have you deployed automation into your AP processes? Are you fully automated? Do you digitize documents but perform manual reconciliation? Do you have any automation but plan to incorporate it in the next 6 to 12 months? Or are you fully manual? And if you feel like this actually doesn't match up with your current experience, please do let us know in the attendee chat while we wait for people to vote. And you can vote by clicking on the polling answer option in the screen in front of you. I'm going to quickly ask a question submitted from an audience member. They just wanted to know, was that 1 to 2 people of $5 billion in spend an annual annualized spend number that they were saving?
So that was an annualized spend. That was $5 billion in annual spend per every 1 million people.
That's a big metric. That's a lot. And so just a quick note, while we wait for people to submit their answers, I did want to know what are some of the real world applications that AP has realized?
Real world applications of AI specifically, correct? Just making sure I understood the question correct.
Yeah.
So I think the first thing is today, historically you have like sort of OCR solutions that you probably have purchased or worked through, et cetera. There's a couple of different types. The math is very, very old, so it's all sort of the same at this point. And OCR would make you do things like build templates, as an example. It would make you draw boxes, geometry around things. You would have to pay extra for indexing that information, so actually making it searchable, sort of ridiculous things that exist because of the legacy providers in the space. So the real world application is now that humans no longer need to input data from financial documentation into an ERP or into an accounts payable solution, an AR solution, whatever. Humans no longer need to be part of the process. In fact, humans only add error signal to that process. They're actually negative value on data entry. The second is on reconciliation. So being able to take all of that data and then match it, reconcile it to a line item level. Historically, you've had to do a lot of manual entry into your ERP in order to create a two-way match, three-way match, those sorts of things. Now it is completely possible to fully reconcile an invoice from its delivery data, and I'll just use shipping as an example. So from customs clearance, warehouse receipts, things of that nature, BLs, to the invoice, to the rate card, to the contract, which means that purchase orders, which are historically an implementation of the contract or the quote of the bid or whatever it is into an ERP so that you could run reconciliation and matches. Purchase orders are used for all sorts of things now, but the truth is they're never entered properly anyway. So what really, what this makes possible in the real world is you can skip the purchase order for the most part when you're reconciling invoices, and you can reconcile to raw, which is really important because reconciling to raw means you're reconciling to the contractual legal documentation that exists. And so your disputes carry a lot more weight. It's not the result of someone making a mistake in an ERP data entry. It's not the result of having to deal with a plugin in some legacy ERP where you've got a lot of forms to click around and you're hiring 800 people offshore in order to do that for you. It's now possible to do that in real time. And finally, that last little bit, which is getting it coded to cash, coded to payment, is really important. At a line item level, humans no longer add value with account coding. And that is a really wild concept for people that have been in the industry for a while, right? Because you always have to validate, and always have to check, and always have to, recode something that someone in a far out flung regional office entered. That work is no longer required, which means that the majority of the solutions that you're used to are completely obsolete. So those are some of the real world applications. And then we're going to talk a little bit more about that after.
Absolutely. This is a huge ceiling shift that you've kind of shared, as well as like the implications. We know that the top two processes and disruptors, as reported by SSON and RNA, are cost savings. That is something that shared services are constantly asked to prove year on year, as well as digitization comes in second. And I feel like these kind of points only prove it, that this is absolutely a game changer. Let's have a look at how some of the attendees are utilizing and deploying automation and what level of maturity they're at. So I actually think it's great to see here that 60% report digitizing documents but perform manual reconciliation, which I think actually reflects what you're talking about with the churn of tools if you're not able to get to that end stage. And then also with another further 30% are just fully manual. And then 10% are fully automated. I'd love to get your thoughts there.
Well, I think everybody that's fully automated really means that someone else does the work. I'm just going to go ahead and call that one out. All of our customers before they came to us were fully automated, and we've made them gobs of money. So just to be very blunt about that, I think fully automated historically meant we added a number of tolerances to these particular vendors. And so if they're $50 to $100 to $1,000 over, it passes through and now we're fully touchless. Or it meant that my AP team doesn't do the work. It means that the business does the work, the regional manager does the work, things of that nature. And finally, they never really think about the fact that for the automation that they've built, they had to have humans configure the workflow in the first place, configure the rules, and then constantly update rules as new vendors are added and as new, or make the vendor, even worse, make your vendor through some sort of like legacy vendor portal, do all of their work for them. So full automation in this industry is sort of a difficult term because it really just means usually, and historically it means just distributing the work to other people from the organization that purchased the product. Or they're a competitor of ours that's on the phone, which is totally fine too.
So I would love to hear a little bit more about this and what this looks like in action. And I think it's that before and after that we're talking about. So I'm going to let you talk a little bit more about what these downstream effects of having sort of more control utilizing these tools mean.
Yeah, I think the thing historically that's happened is you could get great accuracy, but you'd lose speed. Or you could get great speed at the cost of accuracy. And the truth is you need both of those working together to gain control. And so irrespective of if you're evaluating OpenEnvoy, it doesn't matter. Any vendor in the space should be darn near 100% accurate in under a millisecond. They should be able to fully digitize an invoice in under a millisecond. Second, they should be able to fully reconcile an invoice at speed, at scale, millions of invoices, thousands, tens of thousands, however you define that, in under a second. So these are parallel, obviously parallelizable tasks. And so when you are evaluating vendors, speed and accuracy should be how you evaluate them. You should be able to give them documentation wholesale. They should be able to just take it. They shouldn't, there's one of these little tricks when evaluating vendors in this space that I used to use, which is how many examples do you need? And if they say any greater than one, they don't have an actual technology behind the scenes. They have people configuring OCR solutions. So I think that's a really easy thing to do. And then second is all the reporting should be in real time. It should not require batch jobs in order to produce reporting. This is 2023, we're almost to flying cars. We're well past non-real-time reports. So I think that's really important. So that's what I would say, just in terms of evaluating the market as a whole. This should be able to invoice, by the way, invoice reconciliation doesn't just mean invoices. It means all the upstream contractual data, all the downstream delivery documentation for whatever type of trade or transaction that it is. That should as well be able to be digitized and reconciled expediently. Very, very important there. And we're going to show you a little bit about sort of these results in action. So we've got a couple of case studies here we're going to talk about. Feel free to interject with questions. The first, I like media. I was in media for years. We started this company actually for freight and logistics, which we'll talk about on the next slide. But I was in media for years. I really like media. It's very complex. Basically, you buy an ad spot on, like, so let's say television or the internet somewhere, and media companies resell that slot to an advertiser. Right? So you buy from Disney and you resell to Coca-Cola effectively. And that transaction that ad agencies go through is historically fully automated, is sort of what they will all tell you. And then they realize that they're actually just making the media operations team do most of the work. So what happens is they don't do it very well because they cannot, because of timing, because they'd have to remember every single line item they've ever paid before. It's sort of ridiculous. They end up in sort of these manual processes outside of pure AP automation, which we're going to talk about here. But in the first 6 months that they were live with us, they found $925K in overbillings. So almost $1 million. We do not cost $1 million as a solution for this particular volume level. It's not like they were doing a ton of volume, and we already found that much. So a massive ROI in a very short period of time for this particular customer. You can do the math and find out how much it cost. Duplicates, 99% performance on duplicates. Duplicates are really, really problematic for the industry. They involve timelines. They involve the fact that you've paid half of that invoice, but not the other half of that invoice. And how does your team realize that without going back to the contract or the IO? It's really, really difficult, super complex. There's a lot of variable components in it as well. And when you look at every AP automation vendor in the space, none of them handle variable costs very well. So that's number one. Number two is a case study we did with a large shipper, 11th largest exporter in the US, $2 million in a very short period of time worth of savings just off of deduplication. Really simple for us, deduplication. 105x ROI in 6 months. And this is a company that has spent more money in AP automation than we had made at the time. Right? So very real examples. So finally, just to leave it with everybody because we're running up against time. Number one is get serious about finance. Take control of your financials, your operations, and your processes. Get really serious and demand a lot more of the vendors you have. You'll see a lot of them fall down and trip up at that point. Automate it. Stop adding, dozen people here or there to do bill entry because you've got, some legacy billing solution that requires it. And stop overpaying. Right now, the standard operating procedure is don't spot check because you don't want to see what's there, or spot check, find out how much you've overpaid, and then beg for your money back. It's time for companies to get really serious about their cash flow because their competitors are. And their shareholders definitely want them to be a lot more serious about how they treat accounts payable because it is where the cash leaves the business. So super, super important. Those are the three things I'd say as takeaways, but I'm happy to answer questions as well. And I know we're breaking time here.
Matt, thank you so much for your time today. I want to remind all of our attendees that you can type your questions into the attendee chat. It's on the left-hand side of the screen. Everyone's able to see it. It's a great way for you to ask questions and understand a little bit more about this tool. While we wait for people to submit, I did have a question for you, Matt, and I wanted to know if somebody's deployed an AP automation solution in the past and maybe they were disappointed in the results and they felt like it just didn't deliver what had been promised. How do you think an AI-powered solution would be different to that experience in the future?
Yeah, so number one is there's almost no configuration work. There's no vendor change management, and there's very little internal change management in reality. There is some certainly within the team. You're going to require far fewer people to work on the thing. That's number one. Number two is every shared services organization that we sort of meet at first is concerned exclusively about cost savings. Because historically, you couldn't really generate more cash with these tools, right? You'd sort of do the operational efficiency thing and then track back to how it affected cash flow and cost of capital. Now you can specify cash as an outcome, value as an outcome. And that's a much more powerful business sell, certainly outside of finance, than it has historically been. So I think you're not just hiring, 2 headcount using an AI solution. You're actually generating cash flow because if you can start to be proactive versus reactive in your environment. And I think that leads to obviously a greater value. So your business value propositions become value-based versus historically cost-based. You'll get cost savings too, of course, but it's not, the numbers are nowhere near where they are in terms of value-based. And so that's the thing that I would recommend looking at, AI sort of solutions versus legacy solutions.
Thank you so much for sharing that. I do have another question as well. So with organizations with complex environments, we know from our past events that ERP solutions, people often have a dozen ERPs as well as a bunch of efforts and ongoing 10-year chats to fix them and consolidate them, but they're always ongoing transformation projects with variable cost invoices. I'd love to hear from you if there's a solution that can address these needs across multiple systems.
Yeah, so number one is any provider now should be able to get you from 0 contract signed to time to value within a few weeks. So historically, what would happen is you would buy a solution, you'd wait to integrate 3 ERPs, you'd take 12 months to install the solution, another 1x in professional services cost. It was just absolutely brutal. But now with a system like ours, or sort of should be anybody that's doing something similar to us, is you should be up and running like week 1, processing invoices, getting them into your ERP within week number 3 if your testing can go that quickly. And the fact that you have 13 or in number, we just say internally in number of ERPs, those are all endpoints that need to be tested, of course, but they aren't really a challenge for vendors nowadays. They're more of a challenge for just making sure that you can test the output into each one of those systems, which is mostly file-based anyways and not super exciting. I think the other thing is ERP implementations have been somewhat commoditized over the past 20 years, so that's less of a concern now. The bigger concern companies normally have is that they grow organically, so they buy new ERPs through new companies all the time, and they want a solution that can quickly fit. So what you're looking for there is you're looking for not a 1x professional services charge, honestly. You're looking for a vendor that has darn near self-serve integrations. And if you have good, well-structured APIs as a vendor, then those integrations take very little time at all. Our first customer, we'd never done the integration before. It was sort of the thing. It took a really long time. Second customer, next to no time. Now we're up and running with the first 60% of your vendors within like a couple of weeks. And so you can see that there's speed and efficiency there. And I think track to that. You can also protect yourself contractually in those situations and just say each new ERP costs X amount of dollars. I think that's important as well, just to protect yourself contractually. But yeah, there's a lot that you can do there today. And so that shouldn't actually be a problem today.
So we do have time for one more question, and I wanted to ask it from the audience. We have Daniel Mogollon from Kimberly-Clark, and he wants to know what would be a healthy path for automation processes in AP?
Yeah, a healthy path. Number one is determine the outcomes you're looking to have as a business. So start with the outcome and then find partners to work with that align to that outcome, from everything from their technology to their contracts. Like everything should align to the value you're looking to achieve. For Kimberly-Clark as an example, start with the highest variable costs in your business. And I would just say, especially in your business, start with probably freight and logistics, honestly, or potentially manufacturing, depending on what that looks like. I would start there. Deploy a solution that can expand with your needs, your outcome needs, versus deploying a solution that has to sort of sit on everything at Kimberly-Clark, because that's just sort of that'd be just too large, honestly, for any large company that did just take them years to implement. So I think you start with a solution that's going to return value, provable value, that then you can submit to senior management. I don't know what level you are. Maybe you're the CFO. I have no idea. But submit to management to show them the value that you're producing. And that's both from a cost perspective, but also a leakage prevention perspective that is proactive. And especially in your organization where you do have that number of ERPs and you do have that number of trading partners, it's important to have a solution that can digest that very quickly. And I'll tell you, there aren't really solutions on the market that handle variable cost invoices outside of us, to my knowledge. Maybe there are, I'm just not aware of them. And so when you have things like variable fuel costs, as an example, for your business, you're going to submit a lot of disputes to your vendors automatically, and they're going to have to go through and sort of check every line item for you. They might do that for you because you're so large. My guess is not every vendor will do that. So start with vendors that are going to bring a high impact to your business in terms of spend volume, et cetera. So I would start with money, and I would pitch money to the company, and then I would align vendors with the amount of cash you're looking to particularly look at. You can look at a lot of industry standards for how much you're wasting. Our expectation is that every company is probably under-reporting spend by 1% to 3%.
Matt, thank you so much for your time today. I really appreciate everything that you've talked about. I think my favorite line from our conversation was, we're about to have flying cars. Why can't we have true automated AP? I think that was a great key soundbite. I want to let everyone know that if you're interested in sharing this session with a colleague, you can do so by hitting the paper plane at the bottom of the page. We also have a couple of resources available for you to download. You can request a mini assessment. You can learn more about OpenEnvoy, calculate your annual savings with AI-powered AP, You can learn a little bit more with a case study on how Schooler leveraged real-time tech to identify $2 million in duplicate invoices, or you can download the slides just as a reminder to kind of see some of the key action points and statistics that we talked about today. Thank you so much for your time, and this session will be available on demand and in your inboxes very shortly.
Thanks, everyone.